There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
All right, so here we go. Forex Factory calendar. Remember, always shift this date forward to the next week. Just keep in mind here. Do note that I have everything, all the OBS software downloaded on my laptop, but we're traveling here over these 4 days to Florida. I'm going to try and do it on Tuesday at the same allotted time. Not sure what time zone I'll be in, but stay tuned on that one. If some reason I can't seem to get it going off from a Wi-Fi or from out in the middle of nowhere in Texas traveling, let me know. I'll can see if I could post that obviously in the channel and spread the word. So I gave on Saturday, which I would highly recommend doing, a sort of just like an overview of what I kind of see going on as far as global central banks trying to curb inflation. It's important that everybody understands that, at least from the very macro level. I talk even to my children who are in 8th and 11th grade about this a lot, so they can understand just the big money supply picture from a macroeconomic standpoint. I think it's important. So always keep that in the back of mind as I'm rolling through a lot of this stuff. But tomorrow's a bank holiday. Not sure why that matters on Sunday, but keep in mind that as far as I guess the Olympics are kicking off, but it's a holiday in front of that as far as anything to do with the Chinese banking system on Sunday and Monday. Typically means there's a little less volume in Forex land. The RBA statement, this should be interesting on Monday. Do keep this in mind if you're actively trading large chunks of anything to do with the AUD pairs. So notice here, Governor Lowe speaking, and obviously the rate statement the previous day, right? Have a lot of things going on between a holiday there and unemployment / Australian stuff, if you will, coming out. And then we move into the end of the month. So obviously to start off employment week, and to keep in mind, the big report is this Friday, February 4th. That is the unemployment rate that you see here at the bottom. But there's a lot of central banks speaking this week. There's press conferences by a whole host, if not everybody, with the exception of the Canadian and British banks. Everybody else is speaking this week. So just keep that in mind as you're looking through all this. Could be some definite change of pace or signals. I don't think the marketplace is a surprise at this point as far as the tone of central banks changing slightly to a more hawkish type of view, which essentially is nothing more than them putting assets back out for sale in the marketplace of any nature, right? And that typically has an extracting liquidity effect to that. I think that's pretty much everything I want to say on forexfactory.com. Take a look at FinViz, just an overview. I've touched a lot upon this Saturday, so I don't really want to belabor the point, but I felt I'd give a pretty good presentation on Saturday, just going through correlations between markets. But obviously, all global equity markets have been broadly correlated. quite well. Maybe not as much so in Japan, but there's some ways with one-offs with these guys. But as far as the other developed markets, we've had a sell-off, we've had a correction. Markets trying to price in, will there be a drying up of liquidity? How much rates are going up? Nobody really knows the answer to that. Hell, I don't even know Chairman Powell and some of the other central bankers like a Christine Lagarde know that, right? I think they know they want to curb inflation, but coming in and just cutting off the head of the beast isn't necessarily the best way to do that. It could cause a bloody mess in the streets. VIX spiking. Keep in mind this spikes adds to volatility. No surprise we've seen a complete lift in the energy complex with the exception of nat gas. A lot of this just has to do with supply chain constraints and additional places the governments can run after taxes against you. So, I mean, obviously, if you're looking at all these charts, and let's just focus more on a weekly perspective, I think that'd probably be better. So, looking at weekly charts, you can see the price for most of this stuff supports that inflationary theme that's been going around. Certainly, things like coffee and cotton and all that. And then on the converse or the flip side of that, notice how bond rates have been going down. So if you're heavy in any kind of bond funds, you've certainly seen not necessarily as much in the 2 year because you can see dropping from 110 to 108. It's not like any big deal, but dropping on the 30 year to the lowest level we've seen in almost 2 years, right? Will it continue lower? I don't know. But between 10 and 5 year notes, many of the bond funds this year have posted negative returns, even though they're providing some lower level of income, typically under 2%, unless the portfolio is juiced up with lots of junk paper. These aren't the best place to be right now. I actually ran across a client had millions of dollars in both stock and bond funds, just really terrible allocations. Needs to completely be reorganized. So, just a note for the bond vigilantes out there getting back into currency land. This is really no surprise. So, right when everything's falling apart on the planet, the worst of all evils, which the marketplace considers to be the U.S. dollar at this point, is what garners a lot of the attention. And remember, this is a weekly chart, so each of these represent a single week. But I thought it'd be better off to start just looking at everything from a broad perspective. I mean, just a total rip in the dollar, right? So everything else, for that most part, dropped, and everything underneath it, and to the side of it, all these majors, they all dropped, right? They all blew through some important levels. NZD hasn't been down near levels like this since the early parts of the pandemic. Neither has AUD. CHF still stuck in a range. CAD again still stuck in a range, but we've really pushed down towards the low of this. Again, weekly charts. I'll rip through a couple of monthlies, but the prevailing concerns of the marketplace and actually, let me show one other thing here. So I had, yeah, I'm actually not going to get into that. I don't really have a lot of time for that today. I was going to just sort of not do this call, but since the movers are a bit delayed and we're all sort of packed up, ready to go, waiting for these knuckleheads to show up, I figured I'd take some time to do this call. If you do not know what LastPass is, I highly recommend it. It is a vault that myself and all our employees use for everything storage wise. They also have a really good app that just pre-fills and launches apps on your phone. And yes, it is 10x better than Google Passwords. So one of the smarter gentlemen that I made the point to try and have a really good following against is an Italian hedge fund guy. Let's see if I can find him here in my feed. It's actually got a really good piece out. I had found this earlier, but follow mostly people that are chartists and very generous with a lot of their research on Twitter. He must not be posting too much this weekend. Here he is. So this Casio guy's got some really good stuff, and he puts a lot of funny stuff up here too, but his see if I can find it. This guy's also a master chef. Here it is. All right. So this is really just it's a Bloomberg printout of a correlation between spiking energy prices with expanding volatility across the oil and nat gas. Essentially, while the 5-year to 2-year, what's called inflation swap, these are nothing more just studies of inverted versus inverted yield curves, shooting off a lot of red flags. So you can go through this. I'm actually going to post a link to this on Telegram if you guys have that. That's pretty much everything I had about this weekend. You want to see a more expanded discussion on what I talked about, go back to the Vimo channel, watch last Saturday's presentation. I will wish everybody a safe and healthy and profitable trading week. Remember, position size matters. So do yourselves the favor. You can Google Kelly Criterion, or you can look through some of my pieces I have posted in the Telegram channel. It is a sizing-based algo, essentially a mathematical formula, if you will. If you have 1,000 to invest, or 10 grand, or 100, or whatever the number is, it shows you position sizing, which is actually exceptionally useful in Forex. That way you're not putting every dollar or every usable dollar of one's net worth that's held aside and in a risk-based account, and you're not trading the whole nut. So that'll be my risk management advice, at least as far as trade sizing. Wish everybody the best week. Say a prayer that the bandits don't get us on the road to Florida. May the trades be with you.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.